everyone, welcome to JAIIBontips. Today we will learn the chapter number 4 of AFM, that is Bank Reconciliation Statement. So let's start the chapter. Let's understand the basic terminologies of BRS before going to learn what is the BRS. So let's start with what is Cashbook. A Cashbook is set up as a subsidiary to the general ledger in which all cash transactions made during an accounting period are recorded in chronological order. In simple terms, Cashbook is type of book that is only concerned with the recording of cash transactions of an organization. It performs the dual role of both journal and a ledger for all the transactions taking place in a business organization. What we have to remember that we debit all the cash transactions, all the cash receipts in the cash book and credit all the cash payments in the cash book. So this is the main point that we have to remember. Okay. Next one is Passbook. So a passbook is a traditional method of keeping track of the transactions made in a user account. It depicts all transactions whether they are credited or debited. It also shows where a person spent money and who credited into his bank account. But tell me, do I have to tell you about this? We all the bankers know the dilemma of printing passbooks from the early hours of the morning until the rush of customers fills the banking hall. But what's intriguing about these unassuming booklets is that they represent a tangible connection to the financial world for the account holders. It means it is a cash book of your bank account which is maintained for you by a bank. But the thing is, this is the book where receipts are credited and payments are debited. That means in Passbook, we can see that the receipts are credited and payments are debited. Right? A simple and best example for you can see that the message which comes on a salary date, the notification pops up which says your account is credited by this amount, the whole satisfaction, right? So we understood the simple thing, which is Cashbook says in Cashbook receipts are debited and payments are credited, but in Passbook receipts are credited and payments are debited. It is just the opposite. So let's understand the difference between the two. The cash book is prepared by the business concern. It is prepared by the business owner or the business concerned themselves, right? But the bank statement, it is prepared by bank, right? Cash deposits, we can understand this, that the receipts are debited in the cash book and payments are credited in the cash book. Here, in the Passbook, receipts are credited and the payments are debited, right? Check deposits are debited on the day of deposit in the cash book. Like if Ram deposited a check on 30 of Jan, right? He deposited the check, so he will write in the cash book on the same day. But in the Passbook, he will get the amount on the day when that payment is being done in his bank account, right? We will understand this process again in the later slides. So we understood what the Passbook and the cash book is and how we can do the debit and credit side. Okay, so let's understand what is banking reconciliation statement. A company prepares a bank reconciliation statement to compare the balance in its accounting records with its bank account balance. The statement shows reasons for any discrepancies between the two. The two what? The cash book, which is maintained by the business owner or the business concern, and the Passbook. A bank reconciliation statement is a valuable internal tool that can affect tax and financial reporting. and detect errors and intentional fraud. So, in simple, bank reconciliation statement is a document that helps us compare the transactions in our bank account, which we can see in our passbook, with the transactions in our financial record, which we can see in our cashbook. Right. So, let's understand this with an example. Imagine a small business owner, Ram. He diligently records all his financial records in his cashbook. Whenever he receives money from sales or makes payment for expenses, he notes them down in the cashbook immediately. On the other hand, the bank follows a slightly different procedure. Suppose Ram receives a check for rupees 20,000. From a client on the 29th of the month of July. Eager to have the funds in his bank account, he promptly deposited the check on the same day, that is 29th of July. Right. However, the bank takes some time to process the check. They need to verify the authenticity of the check and ensure that there are sufficient funds in the payer's account to cover the amount. Let's say the bank takes 3 business days to complete this process. Only after confirming the validity of the check will they credit the rupees 20,000 to Ram's bank account, right? This means that even Ram deposited the check on the 29th, the bank might credit his account on the 1st of next month, that is 1st of August, because bank took 3 business days to process that check. Now, if Ram were to check his cashbook, he would see the entry on the 30th to check if they are equal. However, if he were to compare this with his passbook or bank statement, he see that the credit entry was on the 1st of the next month. This difference in timing could create a mismatch between the cashbook balance and the passbook balance. So, to avoid any confusion, Ram needs to regularly reconcile his cashbook with his passbook. This reconciliation process involves comparing the transaction recorded in his cashbook with the ones in his bank statement. So by doing so, he can identify any timing discrepancies and ensure that his financial records accurately reflect his actual financial position. So in this way, the practice of reconciling the cashbook and the passbook helps Ram keep track of his true financial status and manage his business finances effectively. Right? I hope you understood the banking reconciliation statement. What is the meaning of that and why do we need that? Let's learn what are the causes for passbook and cashbook being different. So there are 3 mainly errors or 3 main causes for it. First one is errors done by cashier or any business concern, right? That are undercasting. Undercasting means if Ram deposited rupees 100 and it is mistakenly written as rupees 10, then this is undercasting. It is either done by cashier or any business concern who is making cashbook, right? It is done by anybody. So this is the undercasting if we write less amount than the actual amount. But if we write the excess amount or the over amount, like I have deposited rupees 100 but I written it as rupees 1000, then it is known as overcasting of that amount. So this is the undercasting. If I write 10 rupees instead of 100 rupees, and if I write 1000 rupees instead of 100 rupees, then it is overcasting. Next one is recording entry in cash or discount column. Next is crediting or debiting. Like if I credited rupees 1000 but I wrote down in the debit column. So this is the error. Next one is entries which do not require change in cashbook, but I mistakenly did that entry in the cashbook. Like checks issued but not presented for payment. For example, if I gave the check of rupees 1000 to Ram, but Ram didn't presented this check in the bank. But as I gave this check to Ram, I will write this amount in my cashbook. But as it is not presented in the bank yet, it will not be written in my passbook. So it will be an error, right? Similarly, cash deposited into bank but not yet collected. Now let's reverse this case. If Ram gave me check of rupees 1000, Ram gave me check of rupees 1000. I wrote this in my cash book, right, that I have got rupees 1000, but I didn't have collected this amount in my passbook because there are any of the errors, like bank needs 3 business days, like the last example, or there is no amount in Ram's account, so the check is bounced. So any of the cases is correct, right? Next one is entries which require change in cash book, like the bank charges. I didn't get to know that bank has cut the charges from my account, but when I realized that bank has deducted that amount in from my bank account, so I will deduct that amount from my cash book, right? Similarly, interest in saving bank, I didn't know about it, but bank gave me some interest in my saving account, so I will wrote that amount in my cash book whenever I come to know about it. So whenever we reconcile the cash book and the passbook, we get to know that the bank has given me interest in my saving bank account. So I will recorrect my cash book, right, according to it. Similarly, interest on overdraft. Similarly, amount collected by bank on standing instruction. I didn't get to know about it, but when I check my passbook that I have collected this much amount in my bank account, I will correct my cash book, right? Amount paid by bank on standing instruction, and direct payments into the bank made by traders customers. Like Ram deposited 10,000 rupees in my account. He didn't tell me and I also didn't know about it. So whenever I check my passbook entries, I get to know that Ram has deposited 10,000 in my bank account. So I will correct my cash book and enter this amount in my cash book also. So this entry will require the changement in my cash book. I hope these errors or these causes are clear to you all. Let's understand this with an example. So let's understand this with an example. The cash book shows a bank balance of 7,800. On comparing the cash book with passbook, the following discrepancies were noted. Find balance as per passbook. So before understanding this, let's understand what are the favorable conditions and what are the unfavorable conditions. So the favorable conditions are which says that your amount is credited. So in cash book, favorable condition is debit part, and in passbook the favorable condition is credit part, right? And unfavorable means your balance is deducted, right? So in cash book that part is credited, and in passbook that part is debited. Okay, I hope you understood this. Let's see the example. Checkbook deposited in bank but not credited. We have the amount 7,800 in our cash book. This is the positive balance, that is the favorable balance. We have this much balance in our cash book, 7,800. Now, while reconciling the cash book and the passbook, we realized that in passbook these entries are done, but we didn't have done these entries in our cash book. Let's check it one by one. Check deposited in bank but not credited. I have deposited the check in bank, but it is not credited yet. That means it has not been come in my account, right? So I will deduct that amount from my cash book because this amount is not present in my passbook. Next one is check issued but not yet present for payment, rupees 1,500. That means I have given a check for the payment. Like I have given a check of 1,500 to Ram, but he didn't present this check to the bank. But I have written this payment in my account, in my cash book, and I have deducted that money from my cash book. But now I saw that this amount is present in my account and this amount has not been deducted yet because Ram has not presented that payment yet. So I will add this amount because this amount is present in my passbook. Insurance premium paid by the bank. Now I didn't know about that payment which is done by the bank. That is insurance premium which is done by the bank. I didn't know about it. But when I reconciled the passbook and the cash book, I get to know that insurance premium has been deducted. So I will also deduct this amount from my cash book. Next one is bank interest credited by the bank. I got this bank interest in my bank account, but I didn't know about it. So I didn't write that part in my cash book. Now while reconciling, I got to know that this amount has been credited by the bank in my bank account. So I will add this amount in my cash book, so that my cash book and the passbook will be equal, right? This is the main purpose. Bank charges. I didn't know about it, that the bank has deducted this amount. So I will deduct that amount also. Directly deposited by a customer. I get to know that Ram has deposited rupees 4,000 in my bank account. So I will add this money in my cash book, that this amount is present in my passbook, but I have not written this amount in my cash book. So I will write this amount in my cash book. So I will get 8,600 while calculating this. So this amount is present in my passbook and this amount will be present in my cash book if I do these corrections in my cash book, right? So this is the right answer. I hope you understood this example. So let's cover many more questions in our Telegram group, that is JAIIBontips. Read the notes, complete the questions, and we will do lots of questions on BRS, and we have also done the questions for journal entry. So solve that questions too, then go through the BRS questions. So see you the next time. Bye bye.